Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China National Building Material Company Limited annual report. China National Building Material Company Limited is a diversified conglomerate that operates through 5 key segments: cement, concrete, new materials, engineering technology services, and others. The company produces and sells a wide range of building materials, including cement, concrete, aggregate, and fiberglass, as well as composite and light building materials. In addition to its core business, the company also provides engineering technology services to glass and cement manufacturers, equipment procurement, and procurement supply chain services. Its new materials segment includes the production of advanced materials such as wind power blades, lithium battery separators, hydrogen energy storage and transportation equipment, carbon fiber, graphite powder, spherical graphite, and graphite anode materials. The company's merchandise trading business involves the import and export of goods, while its other businesses include operating a chain of warehouses. With operations in over 20 countries across Asia, Europe, Africa, and the Americas, China National Building Material Company Limited is a global player in the building materials industry. In China National Building Material Company Limited market capitalization of $36 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that China National Building Material Company Limited holds a significant advantage in their industry. China National Building Material Company Limited trades at a lower price-to-earnings ratio of 6 times and a lower price-to-book ratio of 0.31 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.57%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. Revenue growth is primarily driven by several key factors. Firstly, the engineering segment has seen significant growth, with an increase of 54.7% and 31.4% in the concrete materials services segment. Additionally, new segments have shown promising growth, with an 18.43% year-over-year YoY increase in total assets and a 6.2% YoY growth in cement segment total assets. Geographically, revenue growth has been observed in various regions, including the Middle East, plus 34.9%, Asia others, plus 14.9%, Africa, plus 21%, and Americas, plus 59.7%. Furthermore, sales volume growth has been recorded in specific product lines such as fiberglass, 3.1%, wind power blade, 50.8%, coatings, 36.8%, lithium battery separator, 75.5%, and carbon fiber, 53.3%. On the other hand, revenue decline is primarily attributed to several factors. Firstly, there is a lack of specific information on drivers of revenue growth or decline provided in some sections. Secondly, sales volume decline has been observed in certain product lines such as cement, minus 10.7%, clinker, minus 17.4%, commercial concrete, minus 3.8%, and aggregate, minus 1%. Additionally, average selling price declines have been recorded in gypsum board, minus 7.7%, and waterproofing membrane, minus 7.3%. Overall, the analysis suggests that revenue growth is driven by a combination of segmental growth, geographic expansion, and sales volume increases in specific product lines. Conversely, revenue decline is primarily attributed to sales volume and average selling price declines in certain product lines and regions. The company's financial performance has shown a significant improvement in its ability to generate cash from its core operations. According to the latest figures, the net cash inflow from operating activities for 2025 reached a substantial RMB 22,518.2 million. This indicates that the company is successfully converting its profits into cash, which is a crucial aspect of any business's financial health. This positive trend in operating cash flow suggests that the company has been able to manage its expenses effectively and optimize its revenue streams. As a result, it has been able to generate sufficient cash to meet its operational needs, invest in growth initiatives, and return value to shareholders through dividends or share buybacks. Overall, the company's ability to produce positive operating cash flow is a testament to its financial discipline and strategic management. The company's debt level and interest expenses have undergone significant changes over the past year. While total borrowings remained relatively stable with a minor increase of 0.2%, there were notable shifts in the composition of liabilities. Current liabilities increased by 11.1% due to an increase in bank loans, while non-current liabilities decreased by 5.5%. Bank loans specifically saw a 2.6% rise from RMB 150,972.5 million to RMB 156,134 million. In contrast, bonds experienced a significant decline of 12.3%, decreasing from RMB 40,500 million to RMB 35,500.8 million. This change in liability composition had a ripple effect on interest expenses. Interest expenses on bank borrowings actually increased by 1.2% despite the decrease in total interest expenses. However, interest expenses on bonds and other borrowings decreased by 22.9%. Overall, total interest expenses saw a notable decline of 6.3%, from RMB 5,236,794 to RMB 4,921,269. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would be worth mentioning. This suggests a stable and consistent approach to business operations, with no major changes in the company's portfolio or structure. The company's financial activities have been a subject of interest for investors. According to the extracted summaries, there is evidence to suggest that the company has paid dividends to its shareholders. This indicates a commitment to returning value to its investors through regular distributions. However, upon closer examination of additional information on page 48, it appears that the company's financial strategy extends beyond dividend payments. The document explicitly states that the company has indeed engaged in share buybacks, which is a separate and distinct financial activity from paying dividends. This suggests that the company is actively managing its capital structure to optimize shareholder value. That concludes the financial summary for China National Building Material Company Limited. Feel free to comment below, and I will be happy to answer them when possible.